Hi, it's Joe Follico again. This video will explain another major advantage to investing in commodity futures, so keep watching. At the time, Chicago was a major commercial center for agricultural products. Farmers and buyers of their crops began creating contracts between each other to set prices for future delivery. For instance, a wheat farmer agrees to sell 5,000 bushels of his wheat to a flour mill in 3 months at a specific price. By doing so, the farmer knows in advance what he'll be paid for his wheat. Likewise, the flour mill will also know what their cost for the wheat will be in 3 months as well. Neither party has to wonder what wheat prices may be in the future. As this practice of creating these contracts for future delivery developed between producers and users, these futures contracts began to be bought and sold by third parties, either for hedging or speculation purposes. I hope you're finding this video informative. Please take a moment to click the like and subscribe buttons below if you'd like to see more videos like these. Jump forward over 170 years to today, and we find investors using commodity futures and options to hedge their investment portfolios. For example, investors who have a portfolio of stocks could sell Dow Jones, S&P 500, or Nasdaq stock index futures, or purchase put options to help protect their stock portfolio from falling stock prices. The mechanics of hedging an asset to protect it from price drops is quite simple. Let me explain. An investor who holds physical gold in their portfolio can sell gold futures contracts or purchase gold put futures options to help protect from falling gold prices. This can essentially lock in the value of an asset. For example, if gold is currently valued at $1,800 an ounce, an investor could sell a gold futures contract to protect their physical gold from losing value. If the price of gold were to drop $20 an ounce, the investor would have no loss as his short futures position would increase in value as the physical gold decreased in value. When looking to help reduce your financial risk, commodity futures and options are some of the most commonly used investment products to help you reach that goal. If you have any questions, please leave them in the comments below or feel free to contact me directly. As always, I'll be happy to help.